our world business news, Japanese stocks advanced, pushing the Nikkei 225 index to its highest level in 7 weeks amid increasing confidence that Greece will avoid a default. That reduces the risk banks face, which are exposed to Greek bonds. The Nikkei ended the trading day up 0.2% to close at 9,816 points. While investors calmed down about Greece's debt situation and hopes rose that Japanese companies are recovering fast from the damage the devastating earthquake caused in March, some stock traders were taking profits today on the last day of the second quarter. And also the euro pushed higher for a third straight day after the Greek parliament yesterday passed the austerity measure by a margin of 155 to 138 votes. And more on Greece. German banks are the last to push towards an agreement to roll over their Greek debt holdings after heavy pressure from the Eurozone's governments to help avert a meltdown, as the head of Germany's largest bank, Josef Ackermann, put it. To talk about this further, we're now joined by Bruce Powers, Head of Research at Trust Securities. Welcome, Bruce.
Thank you.
Now, if the banks agree to a rollover plan, that doesn't mean that the rating agencies will rate this positively. They could say this is a default for us, and that would mean Greece is bankrupt. Why aren't there EU governments putting more pressures on Standard & Poor's, Fitch, and Moody's?
Well, look, any plan that is proposed would have to be structured so as not to trigger a default by the rating agencies or a required payment by the credit for the credit insurance. The plan, as I understand it, calls for the banks to voluntarily roll over some of the maturing debt. Now, since it's a voluntary rollover, this should technically not trigger a default as is currently understood. The current proposal is for the banks to roll over up to 70% of maturing debt and convert it into 30-year bonds. This plan still has to be worked out. It's not for sure yet, but it looks like one way or another they're going to come up with some type of deal. Now, as far as the rating agencies, these are private organizations. They're not beholden to the governments. So they can put pressure, and I'm sure there's a conversation going on because however you look at it, they're not going to come out with a proposal that is likely to trigger a default.
Let's look at the Eurozone again, but from another perspective on interest rates. Now, we had inflation data for the Eurozone out today. June's inflation was at 2.7%. That is still well above the 2% threshold that the ECB aims for.
Right.
Where do you see rates heading in the next 12 months or so?
Well, right now the expectations are that the central bank will raise rates by 0.25% next week at their next meeting. Now, this is going to be the second rate increase since April, and it will put the benchmark rate at about 1.5%. The central bank it's a little difficult for them because they're trying to balance inflation concerns without hurting the weaker economies like Portugal and Greece and Spain and so forth. Now, so far, the inflation has been above the target due to higher commodity and food prices. As those prices start to come down and consolidate a bit, that will put lower pressure to continue to raise rates. So I think that's a good chance that will happen as we move further in the year. I won't be surprised to see another quarter-point increase at some point before the end of the year, but I think that inflation should start to come closer to 2%, and we won't see a rapid rise in rates after this next one.
Thanks for your insights. Have a good weekend.
Thank you.
Powers. The clock is ticking for the U.S. government, with the administration saying that the United States will run out of money in early August. President Barack Obama says he is confident that Congress will reach a deal to raise the U.S. debt ceiling. At a White House news conference, he said no one would want to face the cost of inaction on the debt ceiling. Obama said he and Vice President Joe Biden would therefore continue talks with the Republicans to reach a deal that would cut the deficit and raise the federal government's debt limit. Because if Congress doesn't raise the government's borrowing limit before August 2nd, the Treasury Department will no longer be able to meet its obligations.
The United States government, for the first time, cannot pay its bills. If it defaults, then the consequences for the U.S. economy will be significant and unpredictable, and that is not a good thing.
Leaders from the South American trade bloc Mercosur met in Paraguay for a summit aimed at tightening integration and increased trade within the zone. The heads of state discussed cooperation in the trade bloc, which includes Argentina, Brazil, Paraguay and Uruguay, because all four Mercosur members are grappling with cheap Chinese exports that have hammered sectors such as Brazil's shoe industry. Also, the four economies are keen to reduce their dependence on commodity exports. Before we go, here's a quick overview of the Asian equity indices as well as the oil and currency markets. And after that, Lord Buckwell is back with the news.